With 1 week of January under our belt, we still see, of course, the hangover of the New Year's weekend in the housing data. And available inventory of homes for sale declined last week. We have 40% fewer homes on the market now than we did when we started 2020 pre-pandemic. The real signal for the full spring and therefore the whole year comes between the second and third week of January. So stay tuned for the next few weeks and we'll watch whether buyers are just looking or if they're ready to take action. But there are some surprising data points sneaking into this earliest measures of the new year. So stay tuned for those. Every week, of course, Altos Research tracks every home for sale in the country. We analyze all the pricing, all the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. If you aren't using Altos market reports with your clients, your buyers and sellers, now might be the time to step up. Go to altosresearch.com and book a free consult with our team. Because everybody is worried about what's happening in the market right now. They need you to help them see clearly. There's a link in the description below to connect with us. Just as a reminder, the data we cover here in these videos is national in scope. But Altos covers every zip code in the US. So join us to dive in. I'm Mike Simonsen. I'm the founder of Altos Research. And here's what the data looks like for the first full week of 2023. Available inventory of homes for sale declined 4% last week to 471,000. Inventory fell over the New Year's weekend in all the big markets, of course. California had a particularly notable drop in the number of homes on the market. And even in cities like Austin, they've had the greatest buildup in inventory over the last year. And Austin has more homes on the market now than at the start of 2020, before the pandemic. But even in these markets, we still see, of course, decline in inventory over the holidays. So Austin has maybe 10% more homes on the market now than to start January of 2020. The state of Texas, though, has 20% fewer homes. So Austin has more, 10% more. State of Texas has 20% fewer homes on the market right now than pre-pandemic. And that's true across the country. So a few of the hottest pandemic markets cooled the fastest over the last year. But in general, the country still has very restricted supply of homes to buy. That might be a surprising notion if you pay attention to the headlines, which have been almost universally bearish. But the fact is supply is very tight. And since we have 40% fewer homes on the market now than we did in 2020. And that was already a record low at the time. You can see 763,000 homes on the market to start 2020, I've highlighted in this chart. One thing to note in this chart is that in most years of the past decade, inventory starts climbing in January as new listings come to market and buyers don't yet, kick in earnest until February or March. During the last 2 years of the pandemic craziness, inventory had much further to fall still in January. So in 2021, inventory didn't bottom until the end of April. And you can see how the line keeps falling past the 396,000 homes that were on the market January of 2021. And last year, inventory didn't bottom until the end of March. So I think inventory will resume its more normal shape this year and bottom in January, in the next couple of weeks. That'll be normal. But if it doesn't, that'll be a real surprise and actually bullish for home prices in the sense that the supply side of the supply-demand equation will be staying far tighter than expected. So watch for that change in the next week, the week after. I expect inventory to rise. If it doesn't, that's a bullish or at least less bearish signal for home prices in 2023. Wouldn't that be a surprise? You can definitely see the restricted inventory when the restricted supply when we look at the new listings volume each week. This week, only 38,000 new listings hit the market. It's New Year's, of course, so that's going to be small, but it's 17% fewer than last year at this time. Last year, there were more immediate sales, so the total inventory count kept declining. In this chart, each bar is a week. The total number of count of new listings coming to market in single-family homes in a given week. The light portion of the bar are those that went into contract immediately after listing, and very few immediate sales anymore. But also significantly fewer sellers. So if you're a potential seller, it's very easy to stay on the sidelines right now. You're enjoying ultra cheap mortgage, and you know that buyers have been scarce. So at this low rate of new listings each week, you can see why I'm interested in seeing, like, does inventory climb like I expect in January? Does it keep falling like it has the past couple of years? Stay tuned. I expect it to climb in the next few weeks. By the way, next week, January 19th, 10 a.m. Pacific, is our Altos Research monthly webinar. We'll look at all the inventory trends. We have that one more week of January to watch for, and then we'll be able to talk about that. We'll look for that inflection point in inventory. And we will share all the leading indicators and many of the local markets. The local markets are the story right now, as some are very different from the national trends, like I mentioned, Austin. So there's a link to register for the webinar in the description below. Click that to join us. These webinars are limited to 1,000 attendees. You can reserve your spot right now. So click that link below and join us. There is a lot of signal in the pendings data as well. So these are the homes that are in the contract pending stage. They're no longer active listings, but the sale is not yet closed. These are transactions that will happen in the future. The biggest note right now is that in the pendings data is that we have very few ready to close. Only 236,000 single-family homes in contract right now. That's 35% fewer than last year at this time. And in this chart, each bar is a week, and with the total count of homes in contract, the light portion of the bar are those newly in contract that week. And you can see how dramatically smaller the light portion of the bar is and has been getting since June. So that's transaction volume shrinking. So while supply is lower than expected, demand is also low. And one thing this tells us is that the headline home sales numbers that we'll hear for the next several months will be bearish. You can already see it. The homes in contract now close in February or March. They get reported in March and April, and then you start hearing about it in the media, the headlines. And so we will see if the pendings numbers turn around before then and start to climb. I've been hearing some anecdotes about maybe some resurgent buyer interest this spring from a few different sources. So that's not in the data yet, but we will see it here if and when that change comes. Because it's just past the first of the year, home prices had their first week-to-week uptick since early July. So just a tiny little uptick from $405,000 to $405,200 this week. So assuming we have inventory increases next week, like I've mentioned, that'd probably be accompanied by a little price increase too. Remember that the best inventory gets listed in the beginning of the spring, and so prices always climb at that point. The question really is how much they climb or don't climb this first quarter, and that's going to set the trajectory for how far home prices climb or fall year over year in 2023. The price of the new listings actually did a surprisingly big jump this week to $395,000. That's the light red line here. See the jump at the far right end of the chart? Like you can see every year, The first couple of weeks of January, that jump happens. This one, however, was bigger than I expected. And frankly, I don't really know why. It could be that we just have very few new listings. And so only the best stuff, which waited over the holidays, said now says, okay, let's list. And so the new stock is maybe relatively better quality than you might normally get this first week of January. It's just one data point, so don't read too much into it. But that took me by surprise. The stronger pricing leader, it's a stronger pricing leading indicator than I expected to see. It's just one data point, so we're going to keep watching this leading indicator, especially in the next few weeks in January. But keeping with the theme, the percentage of homes on the market with price reductions is also dropping quickly. Again, this is holiday data, but it's still stronger than I expected to see. We have restricted inventory across the country, and the junk stuff that took multiple price cuts last fall simply has been withdrawn and is not on the market anymore. So we're down to 36.5% of the homes on the market have had a price cut recently. Price cuts should decline with the fresh inventory through at least February. And as that inventory ages, then in March and April, price cuts start climbing again. If we get to the point that mortgage rates have, say, climbed back over 7%, then I'd expect demand to get shut down like it did in September. And you'll see inventory climb, and you'll see price cuts climb pretty dramatically too. You'll see the inflection point in the price cuts early. In this chart, each line is a year here. The light red line is last year. And see in March where the light red line started climbing before the tan line of 2021? That was the moment we could see demand change. And we could see it again in September when rates spiked over 7% with a renewed surge in price reductions. So right now, price reductions are actually not crazy high, and they're falling faster than I expected. So that's definitely another thing to keep an eye on for helping buyers and sellers to understand what they're actually going to walk into the market if they start working right now. That's one of the things we try to do in the monthly webinar. We try to help you communicate with the data to potentials and buyers and sellers right now. Everybody needs to know what's happening. So join us Thursday, January 19th, next week, 10 a.m. Pacific. There's a link to register in the description below. These are limited to 1,000 attendees, and we have way more than that register each month. So grab your spot so you don't miss it. If you need to communicate about the local market to your buyers and sellers, go to altosresearch.com, book a free consult with our team, learn how to interpret the data for this crazy market for your people who need it most right now. They need you to be the expert for them. This is my favorite time of year to watch the data, especially the leading indicators. So stay tuned in January. All right, more next week.